Okay, and in this week's podcast, our topic is CPA practice transitions, preserving clients, staff, and legacy. And I'm thrilled to introduce my guest this week, who is Rishi Gautam, CPA, founder and director of Venning Advisors, as well as other several portfolio companies. Rishi is the author of the book, The Insider's Guide to CPA Practice Transition. Rishi is also an active member and board member of YPO Northeast Integrated Chapter. Rishi, I'm so thrilled to have you on the show, man. This is awesome. You
Yeah,
know,
thanks for having me. Appreciate it. Yeah.
we've known each other for a couple of years now and really gotten to know each other over the past couple of months, but there's a lot of money flowing into, acquiring CPA firms and even some of the PE guys. So I thought this was a timely and relevant topic. You're the expert, of course. You've been doing this now for the past year or so quite heavily. So let's get into it, Rishi.
Sounds good.
All right, awesome. So let's understand the transition landscape. Why is transition planning often delayed or avoided by CPA firm owners, Rishi?
So I would say there's just a lack of understanding of where to go, who to talk to, what resources are available. It's a very lonely world from a seller's standpoint, someone who's trying to transition. Oftentimes their peers are of equal age, equal status, also trying to do the same thing effectively. What do I do with my practice? The resources out there are very sparse. So although we have a book, The Insider's Guide to a Practice Transition, there isn't 100 books. There's maybe three, four business brokers that specialize in CPA practices, but obviously they're geared towards affecting a transaction, not necessarily facilitating a transition in a more smoother way. So limited understanding of what's out there. Oftentimes, I would say 90% of the time when we're talking to CPAs looking at transition, they ask me, "So what do I do? Where do I go? How do we do this? How does this work?" And that just shows after numerous conversations, if everyone's saying the same thing, there's probably a trend, and the trend is not necessarily misinformation, maybe just a lack of information and availability of options.
Got it. Okay, all right. So what are the most common triggers, Rishi, or life events that lead CPAs to finally start thinking about succession?
It's your typical sort of trends. It's age. Unfortunately, sometimes it's health. It's just general wherewithal of seeing the world. Grandkids start to appear. The spouse, the better half, says how many years you're going to keep working 80 hours plus. A number of different things. Some folks come to us and say, Rishi, I want to do this in 5 years. Some folks say, Rishi, I want to do this in 5 months. We get a wide range of timing, but ultimately it's coming from the same source, which is I have to do something. Let me figure out what I need to do. And we just have to listen, be flexible, understand what the dynamic is at the local office, and hopefully come up with a way to do something.
All right, now good stuff. So we're going to keep peeling back layers here a bit, Rishi. So what are the biggest risks when a CPA firm doesn't plan ahead for succession or sale?
Well, there's a number of risks. I think clients of all, of all shapes and sizes, they're smart people. They see the writing on the wall a lot faster than sometimes the CPA practice owner sees it, and they'll leave. They'll go somewhere else. They'll see someone who's not responding as fast as they used to, or even saying that they want to retire, and clients will pick up on that cue, and you'll have less of a practice to transition the more clients read those tea leaves. So you want to avoid that, and what we encourage is to get in front of the clients, to tell the staff, tell everyone, I am in the process of putting a long-term transition plan in place for the continuity of this business. There's nothing wrong with that. People will appreciate it. The transparency, the fact that you're thinking above and beyond your own particular lifespan, and it's not about you, it's about them, and on all of the great things that are necessary. So get ahead of it, and the planning is one of the biggest risks, and then also waiting until it's sort of beyond the timing. So some folks will call us in June and say, okay, I want to transition by the end of the year. Well, we've got to go through a tax season together. We've got to see the clients. We've got to see how you operate, how have you managed the client service models, et cetera, the staff. So ideally stay for at least one tax season. Tell me in June you want to leave in December. We could make it work, but it'd be preferable if you give us more time together so that we can transition. So it's also the pacing in general, the pacing expectation. So, bunch of different factors, but it's it's a labor of love either way, and we enjoy doing it.
All right. And so, Rishi, just out of curiosity and interest here, money's flowed in from the PE firms. There's been roll-ups and acquisitions pretty recently, actually. The accounting kind of profession, sometimes is viewed as old school, just like the legal profession, etc. But more recently, there's been quite a bit of money and interest in acquiring these businesses. Why is that the case, do you think?
I'm one person's opinion. I do have a background in finance. I know how to read a newspaper or two. I would say it's a 15 or 20-year story. The saga started with wealth advisors.
Yeah.
Wealth advisors started taking in private equity money. There was consolidation in the investment advisor landscape, the independent advisors of all shapes and sizes now. Some are publicly traded, multi billions of dollars under management, et cetera. And a lot of that money realized and are starting to realize you need additional value add services to complement the investment advice. If you or I are clients of an investment advisor, chances are our money is literally sitting at a Schwab or a Fidelity, a big institution. If we don't like the color of our advisor's shirt one day and say, okay, I'm gonna go across the street, we can go across the street because
Yeah.
the advisor that we're going to is also at Fidelity or Schwab, and custodian stays the same. The advice, they work for us. We can probably get better advice. Now, if that same original advisor was also doing our tax return, has our data providing very holistic analysis. Well, we like that. I mean, we're not watching the S&P as much because with this advisor is actually thinking about after tax analysis and maybe we have some capital gains that we're going to be able to or losses, excuse me, we're going to offset some gains this year. Okay, that's great. That's holistic planning. That's fantastic, all in one. So tax accounting has this value add service to complement the investment advisors. We've seen that theme ourselves and obviously reading the same newspapers. And then the accounting space in general pretty much is the typical PE playbook. There's 50,000 CPAs roughly, CPA firms in the country. There's only a couple hundred that have real meaningful revenue. So extremely fragmented, relatively aging population with the business owners, and ripe for consolidation in such a fragmented industry. That is literally a playbook for many private investors, private equity investors, consolidators, et cetera. In our little world, we just took an approach of we like secondary, tertiary markets. We're not in New York City. We're in Miller Place, Long Island. We're in Toms River, New Jersey. We're in South New Jersey. We're not in Boston. We're in Southborough, Massachusetts, Agawam, Massachusetts. Poll your audience if they know where Agawam is. It's by Springfield, Massachusetts, just in case we're faster than Google search. And there's just a lot of opportunities there to continue serving the same communities and the same clients. So our methodology is to keep doing what we're doing, serving the same communities. We're not trying to do all of this so one day we can compete with the big four and go do a tax return for Home Depot or Coca-Cola or something. That's not our shtick. So some of these private investors are creating platforms so that they could swim upstream and go compete with big four, and that's not what we're doing. We're dedicated to the communities we're serving, and it's working, and it'll continue to because we're there every day, and that's how we just see the world. So investment advisors, kind of from our standpoint in the financial services realm, really led the way. We'll see what happens in this little segment of the financial services over time.
Awesome. No, that's well done, Rishi. That's very clear. Let's stick with the macro theme a little bit because as you mentioned, you've got the big four and then you get the top 10 and then maybe the top 30 or how has um, you know, the CPA firm landscape progressed? I mean, y- we're seeing, there's been some consolidation, let's say in the top 10. They're looking at new services. Where does a kind of demarcation occur, Rishi, between where those top 10 to maybe top 20 firms would take on certain work, vis-a-vis or leaving it to maybe the high street CPA? Where do you see the kind of distinction and the demarcation in those services? And how's that evolved?
Sure. So I think there's a segment we can arguably say top 25
Yeah,
accounting firms don't want to be accounting firms only. They want to be cybersecurity. They want to be
yeah,
fund administration, kind of go a bit horizontal
yeah,
and cover a bunch of different things. God bless them. I mean, there's plenty of work out there. In addition to them, again, kind of going upstream and taking on big four type of work and potentially having their name on audits of publicly traded companies instead of your typical big four. Um, Firm that does that work. And there's a pool, and then you throw in the outsourced CFO, that segment of that population also trying to do work on the client side, with internal controls and all the different, moving into NetSuite
yeah.
and other ERP implementations. That's a world, and it's a great world for a great set of people and private equity backed or otherwise. And then your local mechanic needs his books and taxes done. Your metal shop doing 10 million bucks a year needs his or her books or taxes done. And large construction company needs an audit for bonding purposes. And equally as important, your local government needs an audit. And a lot of those big firms don't touch that work anymore on the local, state, and local government side doing certain audit jobs. And you have a large array of different CPA firms from one partner to 50 to 75 partners that could handle all that work I just mentioned. But there's so many businesses and entities and nonprofits that fall within that realm of once you go below that top 25 type of clientele that we have no shortage of work. Our marketing spend is basically zero because we don't need to, because we have the opportunities in our existing markets to basically just put a figurative shingle out saying, we're accepting new clients and new clients will come in. So we like that area very much because it's growing. We're in markets that have fast growing populations. The dynamics are shifting in our favor in a lot of our offices. And there's plenty to do. And there's a lot of consistent work. Uh, you know, Nothing is ever truly recession proof, but there's a lot of businesses that need our services, regardless of where the S&P is trading or where oil is trading or gold is trading. And it's great. It's consistent. There's a lot of opportunity for us in that general area I described, the type of businesses and entities. And there's also a lot of retail, what we'll call the retail 1040, the individual client who has tax service needs who are not tied to a business. A lot of these firms, let's call them now the top 150, a bigger array of
Mhm.
accounting firms, don't want to handle the grandma or grandpa 1040 that costs maybe the fee is 800 bucks, 1,000 bucks. All of a sudden, as these firms are swimming upstream doing more cool stuff, they're doing cybersecurity, they're doing fund administration. Grandma's $900 1040, $800 1040 may not move the needle as much. We actually have embraced that segment. We've got a little factory in the US. All the work is done in the US, tax pros in the US, a lot of automation to get the paperwork scanned in, processed. So you either don't do any of it or you lean into it. And we decided to lean into it and create an opportunity to manage tens of thousands of clients in that segment, the personal tax services segment, because there's so much work to do. Again, zero marketing. It's a CPA raising its hand saying, we'll take your 1040s off your plate. And all of our tax pros are in the US. We have transparent pricing. We'll pick up the phone on the first ring and give status updates when clients ask, on April 14th, what's the status of their return? And that's a great business in and of itself. So we enjoy this part of the world of the service level. And like I said, there's plenty of work going around.
Lovely. Thank you for that. That's awesome macro perspective there, Rishi. So let's talk about strategic planning and preparation. So, what are the critical components of a successful CPA firm transition plan?
There's a few. I think number one is accepting change and being open to change. Now, just because it's different doesn't mean it's better or worse. It's just our way of doing things. It's our tax software. We use a specific practice management software to keep ourselves on time, on budget. Change is inevitable, even if it's changing how you keep your time from one system to another. That's important. The mindset shift of I'm going through a transition. This is not just me as a seller, um, gonna keep doing the same work in my same office with the same process forever and ever. There is a shift, and as you shift into that business and that separate delivery model, being open to change, number one. And then number two is just similar concept is just letting go. Like you're not going to need to run the practice the same way anymore. That's what we're here for. This is what we do. Centralized billing, centralized payroll benefits for the staff, departmentalizing. Okay, this is the accounting team. This is the business tax team. This is the team doing the assurance jobs. It's not one person wearing those three hats, depending upon which client came in through the front door on a given day. There's a departmentalizing effect because we have so much scale. And being able to embrace that and understand where things need to go in our definition of the world, also important. And letting go and letting us take over the work and moving it along. The work will get done. We know how to do the work. The collective we, the part of it is it's a teamwork to transition the relationship. Who are we talking to? When is the son or daughter taking over the business? Do we invoice this brother or that brother? Who pays our bill? All of the little nuances that we need to understand above and beyond a set of work papers. Very, very, very important for us to have a successful transition. As we talk about it internally, we're only as good as the transition is itself. So if we have a bad transition, if we don't have the information, if the seller is not really saying, okay, this is Venning, this is how we're going to do this, and getting in front of it and being upfront with the client, that guides the success of the transition is that cohesiveness and communication. So a lot of different things, but those are sort of the top of the mind, the things that we think about all the time. The change, it's inevitable. Things will change. Your tax software will change over time, and the letting go are two big key points here.
Understood. And if we just talk about the softer stuff now, the cultural kind of potential challenges, from the acquisitions you've made, what would you say are the cultural landmines? I mean, you're acquire from an acquiree standpoint as well as an acquirer standpoint. What do you say the kind of things that you've got to be very mindful and very careful of? I mean, these are people you're talking about, and some offices are larger than others, and you've got, as you mentioned, decades of ways of doing things. From your experience, Rishi, what are those cultural landmines you've got to be aware of?
The biggest one is technology. You've got offices that, and we're not here to judge, we're here to understand when we go into a new office that we haven't met yet. They just have a way of doing things that it works really well within the four walls of their office. You can take a piece of paper and walk it into Susie's office, and then walk it into Johnny's office to review, and then walk it into Mary's office to process a return. It doesn't work when you've got multiple offices, a team member who's virtual, who has to, work off of the same system as you, updating statuses. So the person 50 miles away in a different office is going to take that and to the finish line, either process, create an invoice, etc. So the technology piece, if you embrace it, adapt to the change of a more cloud-based and a much, more seamless system that can operate a business outside of a particular set of four walls, it's great. If the mindset is, I don't want to change and I don't want to learn a new software, I've been doing the same thing the same way for 30 years, that's totally fine. We are in the more modern tech-enabled format, and the colleagues are all in the US. We're not talking about time zones. We're not talking about language barriers. We're simply talking about someone who's in a similar office in the same secondary or tertiary market in the neighboring state. And it's just simply being able to pick up the phone or chat online and say, "Hey, Johnny, did you check? I updated the status. Can you please review this return so we can get it out the door?" It works really well when people are in the system. Where we've seen the biggest shock and it affects the culture is being able to think and act and work with folks who are in different offices. So most of the time, our transitions are single offices. We are a multi-office firm. We act and created infrastructure to be multi-office, and that is where we need to adjust folks. And again, the ones that really embrace it have done a phenomenal job. We promote from within. There's folks that have started with us in, junior level tax jobs that are now managerial level. There's folks that started with us as administrative assistants that are now project managers leading specific projects to optimize some of our offices and their tech stacks, et cetera. So amazing opportunities. The one word description once folks have embraced the technology and that culture shock, so to speak, is opportunity.
Hmm. Yeah.
A lot of opportunity for growth without having to leave those same four walls that person drives to every single day. They don't have to move. They don't have to go. There's no fancy ivory tower corporate headquarters. We invest in our people, not in the fancy whatever fill in the blank major city ivory tower. That's not us. We're in our local markets, live and breathe it every day. Um, so it's a really cool opportunity when people really take a step back and look at the other alternatives out there. They won't have an organization that's as flat as ours. Decisions get made very quickly. The ability to work from home in a more remote hybrid environments. There is no have to work from the office culture. Um, but there is technology, and there are things that we have installed to make life easier. And if you embrace it, it's great. There is no culture shock. It's actually the positive version of a
Yeah.
culture shock. And that's the big thing for us is being able to get folks on that system.
Understood. Well done. Okay, thank you. So how early should a CPA start preparing, and what are the first few steps that they should take in a transition?
I mean, the short answer is yesterday. I mean, the preparation, regardless of age, health, just have a plan in place. Talk to people. We have always opened our doors. There is no hook. It's a free consultation. We're not consultants. We're here to talk to practitioners. We talk to practitioners literally every single day about this. Talk to people, not necessarily brokers from a transaction standpoint. Obviously, if you want to transact, talk to a broker, we can introduce you to them. But it's the transition thinking. I talked to a gentleman literally yesterday who is in his mid 40s. He took over his dad's practice about 15 years before. His father died unexpectedly from a heart attack, and he came in as the son and took over the practice. He happened to be studying accounting, happened to have a CPA, happened to be working for his father at the time, took over the practice in his 30s. Now he's in his mid 40s. Is he of retirement age? Absolutely not. But he's thinking about transition and what he needs to do. God forbid something happens, what should he do with his clients and his staff? And we had a very honest conversation yesterday. And he said to me, I want to work for another 15 years. And I said, you can work for another 20 years. But here's how we could do it together. Come into our firm, keep working with your clients. You'll have more resources available. Your clients will feel happy and relieved that there's more folks around them, surrounding them in a good way, looking after them. And it's fine. You can keep doing what you're doing. You won't have to be on a one person island in any case. So yesterday. He's 45. And literally yesterday, and my answer is yesterday. Start your planning, and it doesn't have to be formal. It's just have the conversations, get knowledge of what's out there. Think about if you're a single partner firm or even a multi-partner firm, what are you going to do? Certain God forbid scenarios happen. Make sure you have something lined up or thinking about it so that it's not rushed, it's not urgent, it's not something that you have to hurry up and hustle and figure out on the fly.
Love that. Thank you, Rishi. Let's go. Let's keep going. Peel it back a little bit more. So, can you walk us through how a CPA should assess the readiness of their practice for transition, both operationally and financially?
Yeah, so I think the biggest thing is not maybe necessarily operationally or financially. It starts with the mindset. It goes back to the willingness to let go. And part of that we can dovetail to operationally is how much, if you're a single practitioner or you're a multi-partner, are you all running the entire firm? Have you delegated clients to your most, senior staff members? Are you ordering the ink for the printer? Are you overseeing every little detail of every little nook and cranny of the office? Um, all of those sorts of things add up to the ability of how much work you need to do to transition, but the mindset of letting go. Have you talked to your staff and clients about putting a long-term transition plan in place, or have you kept it more as a necessarily a secret. Oh, let's go talk to a bunch of people and then tell them. Because, let's not let the cat out of the bag, but they're probably thinking about it too, of what is the transition plan for this practice. And those feed into how to be operationally and financially ready. Ability to let go, ability to delegate. From a financial standpoint, a lot of the firms have, within a very small degree of variation, they run their practices according to plan. They bill properly for the most part. Not a lot of AR collections, again, for the most part. Expenses reasonable. There's always some nuances with insurance and tax software and whatnot, but all doable from an operational standpoint, financial standpoint. And it's the staff. Then it comes down to the layer of the staff. What is their ability to change? Funny enough, most of the time, the staff's ideas come from the owners and what the owners have told them and what the owner's mindset is. And now you have a collective village voice of the same idea. Sometimes it's great. Yes, we're open to change, and I love the responsibility. My seller partner, my boss used to give me responsibility on clients. Please give me more. Others are, I cannot make a single decision unless I ask this person, even if I'm getting this type of ink toner or that kind of whatever for the famous printer in the office. And that will impact a transition program because now someone like my firm have to come in and basically let the staff understand you are free to make decisions. You are free to work on these clients. You have the skill set and the wherewithal and the gravitas to handle this client relationship. Please go ahead and do that. You don't need to report in from a micromanagement standpoint. Again, nothing wrong with how these transition partners have run their practice, but it's a different world out there when we have to work together in that departmentalized group I described earlier, insurance, accounting, and tax. And our system works, and the ability for the folks that we've brought on through transitions to adapt to that stems from how they were operating in the prior firm. So mindset leads the operational and financial transition. And that's one of the first things we look at is what is their thinking about this? What have they done in terms of planning? What kind of conversations, if any, have they had internally with their significant others, with their business partners, with their staff, with their clients, some of the key clients that they're very, very close to, sometimes executors of their estates. Are they actually having conversations with those families or not? Um, Drives a lot of the transition success for sure.
Understood. Okay. And let's talk a little bit about valuation, Rishi. So, what role does practice valuation play? And how is value typically determined in small to mid-sized CPA firms?
Yeah, so we've seen this movie a number of times, and the typical valuation is in that one times revenue category. Sometimes it's a little bit less, sometimes it's a little bit more, but generally speaking, we're in one times revenue territory. Um, Valuations can change to a larger degree when you have millions and millions of dollars of revenue and all of these systems I'm talking about already in place, and you just so happen to have a retirement transition you need to do and you need to bring in someone. Chances are they may already have someone internally that they can have an in-house transition. But the ones that don't, maybe there's a different valuation for that group. Now you're getting really into that. You're inching closer to that top 200, top 250 accounting firm size. And now you're getting into that more private equity world we talked about earlier on this chat. Um, but one times revenue is a very safe, sound, and reasonable valuation for the practices we're talking about here.
Right. So we've got tracks, and this is a question I'd like to ask you here, Risha. So there's, you got a similar size business, maybe it's one-time revenue, but when Rishi goes out there and sees something special or unique about, you know, firm number two, let's say, what is that? What is that kind of secret sauce that will enable maybe a different turn, revenue turn versus firm number one. What would you look at specifically that would drive a higher valuation? They could be equal size, equal number of partners, equal billing efficiencies, and all this stuff that drive valuation. but there's something unique about firm number two. What would that be? What would you put your finger to?
Yeah, it's a great question. I would say a specialist would be
Mm,
firm number two. So we've got a mutual friend who's a specialist, and this particular practice I'm referencing has enterprise clients. They work on enterprise software implementation when clients grow very fast and they outgrow QuickBooks, they need NetSuite or a fancy accounting system. These clients are about to take in private equity money and they need to have their books in order, processes in place. That enterprise, in my example of being a specialist, could have the same type of profit and loss financial statements as a firm number one type of accounting firm. Um, Firm number one, and for the most part, the practices we see are generalists, which is nothing wrong with that. But
yeah.
there are a few specialists out there. My example being focusing on enterprise clients. We made a decision early on to take one of those specialists, focusing on the bigger clients, more of the middle market, as opposed to the small sized businesses out there, because we do have clients in our general business of clientele, tens of thousands of clients in general. Some of them outgrow, some of them need more things. So we brought a team in-house that can flex up as those clients get bigger, we can continue to service them. So our tagline is from inception to IPO and beyond. And then as the clients go in that direction, another team called Enterprise Business Advisory comes in to manage outsource controller, internal controls, all the testing required for that level of accounting infrastructure, all within our firm. So that to us is a specialist, higher valuation situation. Doesn't happen every day. If we did 15 deals, that's one of 15 where we've done a transition like that. That particular owner stayed, now helps run the entire firm. Again, that's unique. Most of the practice owners we talk to are trying to get on the beach or going on the beach or are on the beach right now because they've already retired, which is totally fine. So there was a continuity effect there as well. And that worked out really well. And that happens once in a while. So there are firms out there that specialize. There's folks that do, particular real estate, R&D credits, cost segregation. There's tax specialists that have a specific advisory. Maybe they advise on international businesses coming into the US or vice versa. All great things. Um, there's a place for them in a particular segment of this services arena, and those folks should definitely consider the value they have for the right partner as they go about their planning. But that's the differentiator, I would say, in short, is the specialist realm.
Perfect. Thank you for that, Rishi. Let's talk about preserving client relationships because that's a big ticket here, client retention,
Yes.
So clients often have deep long-term relationships with their CPAs. What are the best practices for introducing new owners or successors to clients?
So in our particular case, we have a script. Follow the script. It's a
Mm,
very simple message where we want the seller, the CPA transitioning, to instill confidence in the clients that this is a firm that knows how to do the work. I've told them everything I know about you all. You're in good hands.
mhm,
And making sure the client hears that, sees us. We have the ability to communicate with that client. It's part of that letting go construct of just let go. We can do the work, make the introduction properly. Let us do our thing. And that's key. It's a very soft skill, but it's a very important skill and it drives the success of transitioning. We have this exercise we do call key clients. We go through with a practitioner and we go through the key clients. And chances are for every practice where there's a wide array of clientele, there's a certain percentage that has a large percentage of the revenue. And we lean in, we want to understand every aspect, the family members, the business, what industry is the business doing, what do they need that we could potentially help, banking introduction or there's a multi-generational situation and maybe there's some coaching that the second generation needs on how to run the business. We think well above and beyond the tax return for those types of clients. And that's great. But if we don't have a proper, soft, smooth handoff and that instilling confidence from the transitioning partner, we're only as good as, as what we read on paper. So about the client. So that's where the flow of this, the natural handoff has to occur. So when I say follow the script, there is a script. It's a very simple messaging will help drive this, and then that's key, and that's something that we spend a lot of time on.
Let's talk a little bit about what common mistakes do CPAs make that may lead to client attrition during a transition? What's two or three points that you've really got to focus on just to make sure that the clients don't fall off the reservation?
So I think it's the relationship aspect. I think the if we had to split up the world between EQ and IQ, the IQ part we can handle. We can read a set of work papers. Yes, we'll have questions like anyone else, but we can understand the work. The segment of clientele we're dealing with, the complexity level we can handle, barring unforeseen or some unique factors. The EQ, who is this client? How do they feel about the retirement? Were they already planning to go somewhere else because they saw the tea leaves of the aging population of the practice and they wanted to get out, but then now they got this tap on the shoulder that there's this new group. Who's this new group? I've never heard of them before. We got to smooth that out. So the client relationship piece is key, and it's beyond the work papers. It's really understanding what have you done as a practitioner for 30 years in managing expectations for the clients, whether it's the grandma or grandpa who paid you $500 for 1040, or that local business who paid you $50,000 for a consortium of services. How did you treat them?
Hmm.
Because we're walking into that, whether we like it or not, we're
Yeah.
walking into those level of expectations. How much time did you spend on the $500 1040 versus the $50,000 client? If both clients called at the same time, which call are you picking up first? You'd be surprised at that answer sometimes. So we want to know how they've been treated, because when we walk in, we treat the delivery model for that $500 1040. We get the job done, we get the work done, we try to make the clients as happy as possible. That $50,000 client, we get the job done, we try to make sure the client's as happy as possible. There are different people involved. Again, departmentalizing, there's different departments
Yes.
involved and different expectations for the service model. We can't afford to spend 6 hours with the grandma on the 1040. And sometimes we only have 6 hours for that $50,000 client because there's a certain amount of work we have to get done by a certain deadline. So that sort of opening the kimono and helping us understand how you manage things, because each practice has its own way of doing things from the EQ standpoint, right? The tax return, the IQ, that piece, understood. Again, barring unforeseen. The EQ of when clients call, how do you call them back? When they walk into your office, again, when you have the $50,000 client and the $500 client calling at the same time, what's the service model? And that's part of the sometimes retraining, realigning expectations. Sometimes that $50,000 client will be surprised to the upside because now he or she has three people, four people from my firm
Hmm.
all over them in a good way. This is your accounting, this is your tax. We've got an account manager that'll call you every month just to see how you're doing. A CPA firm proactively calling the client just to say hello. How's business? That's a surprise to the upside. Most CPA firms don't have the bandwidth to do that. We've invested time and resources to allow us to say, yes, we can actually do that. So that's a huge piece of this puzzle.
I love that. I love that, Rishi. All right, let's talk about the other side of the fence now about retaining and supporting staff. So, how do staff usually respond to the news of an impending transition or sale? And then part B of that, probably more important, is what strategies work best to keep staff engaged and retained during and after the transition?
Yeah. So one of our famous one-liners, we're only as good as the on the transition as the the information we're getting. So oftentimes we don't meet the staff until after the transition arrangements get sorted. So there's a lot of anxiety in the figurative room. Who are these people? Is my job safe? What's going on here? And why is that? We didn't create that unknown. We were very transparent once we walk in of who we are, what we do. But the the cloak and dagger of keeping the transition quiet and not getting in front of it and being open and honest with the clients and the staff of, I am going to put a long-term transition plan in place for the continuity of this practice. Staff need to hear that. Obviously, clients need to hear that as well. Staff need to know that the CPA owner, practice owner, spent a lot of time reviewing opportunities and made the right decision based upon the continuity of the practice. And staff, there's no ever guarantees in life that you're guaranteed to have a job. You're guaranteed to do the same exact thing that you were doing the day prior. There is a lot of opportunity though in our firm because we have so much going on. We've departmentalized, and if you like doing 1040s, you can do nothing but 1040s. If you love doing accounting, you can do nothing but accounting services. You don't have to wear 10 different hats anymore in a relatively smaller operation. We have matching 401k, great benefits, again, great opportunities for growth. We're instilling this new program to help folks to want to get their CPA license, to help financially support them for that. We're about to partner with a university for earlier stage training, getting them involved with us during tax season, having them move in to the organization over time. It's a really cool setup. But we don't get the chance to say that until after the anxiety level hits its peak of, I didn't know you were retiring. I didn't know who Venning is. Who are these people? What's going on? I don't like this. It's change. It's a shock. It doesn't need to be. So with the staff, ideally, the sooner the better for us to meet them, the sooner the better we can understand who they are, what their hopes and dreams and goals are, and we get them in the right seat. Because that's all we're trying to do at the end of the day is get them in the right seat. We have some admin slash bookkeepers who are full-time bookkeepers now making pretty much a lot more money than they were before because we've specialized them in accounting services. Had we known that 3 months prior, they would have been making more money 3 months prior. Get us in the room so that we can actually analyze and put them let's set them up for success. Obviously their success is our success. So open communication, huge, massively important for the practitioner to really get out there and say, I need you to talk to Venning. Here's why. Here's what they've done with other practices. Here's situations where it didn't work. Here's great situations where it did work with the staff because they were embracing the technology, being able to communicate with the team, embracing the departmentalization of being able to sit inside of a chosen focus area and excelling in there. All we need is the open opportunity. That's all we need to make this work really well with the staff.
Understood. And the big C you mentioned, Rishi, about the communication strategy is key in any acquisition slash integration. What have you found in terms of what kinds of or what kind of communication strategy should a CPA use internally with their team? What have you found to be most effective as regards the cadence and maybe the protocol as regards the communication?
What we've seen work is just simply getting everyone in a conference room and just having a chat. I mean, we call them town halls where we've come in after a transaction has been finalized and the practitioner will make a speech about their retiring and they evaluated some options and then we come in as the chosen option and we have a conversation, which is great, but the anxiety level could be much lower had that conversation town hall happened 3 months prior to the transition finalizing, 2 months prior. Hey, all, just wanted you to hear that I'm close to getting something done here, and this is what you should expect. By the way, here's what the benefit package will look like. They have some great benefits because they've got more people, great health insurance plan. They also have this program for if you want to get your CPA license trickle it out a little bit. Let's get them excited and then they're ecstatic at that town hall when we show up as opposed to who are you? You are new. What are you
Yes.
doing here? Are you getting rid of the office? Is the phone number changing? Are you changing the sign out the front door? All of the questions are coming up when it shouldn't be so defensive. It's actually a really good thing. You now have an opportunity to thrive in an organization that can give you a lot of cool work and opportunity and challenges. Get excited. So that I would say a transition plan in a proper format should be continuous, again, the C word, communication.
Yep.
It doesn't have to be, okay, it's Venning, here's Venning's website. This is their, it could be someone else, it doesn't have to be us. But at least tell the staff, tell them what you're thinking, tell them why you're doing this. It's no big secret how old you are. It's no big secret that you have to put a transition plan in place. Chances are it's no big secret there's not someone within the firm that's coming in to be the heir apparent. And they all know that. Clients know that too. So let's just have the chat, trickle it out, create the opportunity set of positivity as opposed to a shock to the system. Letters go out to clients, they're shocked, they didn't see this coming. Phone calls weren't made ahead of time to clients to say, hey, just want to let you know, been thinking about this for a while. It's time for me to put a transition plan. I'm working on it. Got some really great options out there.
Understand.
Yeah.
Rishi, in the kind of founder world, preserving, protecting, and honoring legacy is important. There's certain, founding principles or traits which have gotten the business to a certain success, which is why, you and Venning and the team are kind of looking at the business to potentially purchase, right? And so, not that everything should stay post-acquisition, but for many CPAs, Rishi, their practice is part of their identity. How do you
Mhm.
advise firm owners to emotionally navigate that letting go process?
It takes time. I mean, the sooner we start engaging with the practitioner, the better, because they can read our book, they can talk to us about what's on their mind, they can start to get the confidence of, yes, I should be saying some things. These are some great things I should be saying to my staff. If we meet sort of at the tail end of a transaction, we get introduced by a broker, for example, and okay, you're on the final list and they're going to make a decision tomorrow. That's tough. That's tough for everybody. I mean, not necessarily us. It's for the clients and staff because then it's more of a shotgun approach, and we got to get the communication out there. There hasn't been time to really settle in and get ahead of it. So that initial town hall is a shock as opposed to an exciting time because this is the new chapter for that firm. So the cadence of this is key. And as we always say, it's a transition, not a transaction. Make it a transition. Doesn't It's okay if it takes a few more weeks or whatnot, or it's a June and we want to have this conversation July, August. It's okay. Spend the time because we want you to have certain messages distributed to clients and staff ahead of time, softly, tactfully, so that when we're ultimately in that alliance and transitioning, it's much smoother. So cadence, kind of the cadence of that is key.
Understand. And how do you help? It's a brand new phase of their life post, many of them are retiring and so forth. And there's a lot of conversation and studies around, the emotional aspects of selling a business, right? What do they do, etc. So you want the owners to be, in the best mindset possible, Maybe the cash compensation is great, but that's not everything, right? And you want a real spirit of collaboration and partnership as you go through the transition. What are some of the tactics, Rich? And this goes to the softer stuff and some of the more EQ kind of tactics you were talking about earlier. What are some of the tactics to make sure that or enable sellers to be in the best mindset possible going through the process? Because it is going to be a change. Who knows where they are mentally? The cash
Mhm.
and other types of conversation when you're selling the business is one thing, but that isn't everything. Sometimes they've got to deal with the prospect of, you know, second phase of their life, and this has been their baby potentially for decades, Rishi.
Yep,
How do you help them with the
absolutely.
soft landing?
So we get the same question every single time. We have the same answer every single time. Question is, how long do you want me here?
Yep,
And the answer is always, as long as you want. We want to make sure there's always an open door for a lot of reasons, but most importantly for the seller, the practitioner transitioning, to maintain as much relevancy as they desire.
yep,
Some folks want to go to the beach. They have grandkids. They want to take care of the grandkids. They are truly ready to move on. Not everyone is the same.
yep,
Some folks still want to work with clients. Some folks just want to do the work. They just love doing the returns. They love the solving riddles and puzzles, and they want to express that by continuing to do the compliance work. We will not get in their way of that that desire. So the relevancy factor here is huge. Post transition, post tax season, number one, usually, and making sure they are very comfortable in their own skin, whatever it is they want to do. We've had situations where one particular transition partner said, Rishi, I don't want to push the pencil anymore, his words, but I love talking to clients. Can I just stay here and talk to clients? We said, absolutely. We have plenty of people to push that pencil. No problem. Manage the relationships. You are basically, in a good way, a client relationship manager. You don't have to be a tax professional anymore or as much. Um, Other folks, complete opposite. Can you put me in the office? I just want to review returns because I enjoy doing that and training, teaching younger staff. No problem. You are a senior reviewer now and you work the hours you want to work. You get assigned jobs, commensurate with the complexity and the time it takes. No problem. If we were different, which we're not, but if in a different world, some folks in my seat would say, "Get out of here. No, you're done." Or stay, work 80 hours a week. Keep doing what you're doing the last 30 years, just now you're an employee. The world doesn't work that way. We can't do that. Well, it's not in our DNA. So as I've said to every seller, that we've met, every transition partner, it's all customized based on what they want to do. And I always joke, your answer always changes too. You tell me one thing when we meet, and then it changes after one tax season, and it's okay. And that's what we say. It's okay. Your answer will change, and whatever your answer ends up being then is going to be whatever we do then. It's fine. So we've made a commitment on a couple of different levels. We don't do anything but books and taxes. So we're not going to open a bank. We're not selling life insurance or annuities. We do books, we do taxes, and obviously some audits of those things on occasion. And we are flexible when it comes to practice transition. We don't have a one size fits all. There's a Venning way in terms of the technology and how we do things to scale a multi-office practice. But the Venning way for a transition is basically flexible, listening first, and proofs in the pudding of what we've done for all the different offices.
Understand. Awesome. Awesome. So we're going to hit the closing reflections, Rishi, and some advice. So if you could offer one piece of advice to CPAs, possibly in their 50s and 60s or early 60s, who haven't started planning yet, what would it be?
Give us a call. I mean, talk to a fellow practitioner, meaning, you can talk to us, give us a call. Just have the chat. It's a lonely world out there when there's other folks that are looking around equal age or, t time in their career, and no one really has the crystal ball. Not to say that we do, but we've done this enough times. You can have a conversation in a confidential, safe place to talk through what you want to do or what even you're thinking about doing. Talk to someone who's done it. Um, we always say we do two things. We run a CPA firm and we transition practices. Make sure you talk to someone that has both. There are folks out there that run CPA firms that think they can transition practices. You don't need someone who could think. Someone that you don't want to know. You want to talk to someone that knows how to do it. And there are firms that all they do is acquire practices, but they never actually run one before. You need both.
Yeah,
Make sure you find someone you can talk to about it. Spill your guts. It's okay, and get a plan in place. It doesn't have to be formal written down. It's subject to change, just like everything in life. And having that conversation is super critical for anyone in that general age range and single partner or multi-partner firm, single office or multi-office firm. It's important to have that conversation.
I love that, Rishi. Great advice. What resources or experts should CPAs turn to when they begin this journey?
Well, I always say, read our book. I mean, it's not for sale. It's not a money-making endeavor. We actually give it away for free. It's an insider's guide to practice transition. It's got a bunch of stories in there. We kept the name safe to protect the innocent, but the real stories, it's some of the things we talked about here, plus more. It's an opener. We decided we made a firm decision that we were going to put these stories down on paper and give it to anyone who needs it, with no strings attached. And I think part of that is, like I said before, it's lonely out there. Talk to someone. If you don't want to talk to someone, just read the book, but at least get some sort of thinking in place of a proper transition. You don't need to figure it out on your own. I think brokers are great. Half the practices we wouldn't have met without a business broker involved. But the advice piece has to come from someone who's actually, again, run a practice and has transitioned to practice. And that's crucial. Again, if we're in the business of solving riddles, you need that as part of the solving part.
Understood. And you reiterated that perfectly, Rishi. What would be your summary 5-point checklist for CPA practice transition success?
Ooh, 5-point checklist. So some of the things we talked about here, obviously putting a plan in place and um, communicating, the communication part to the clients, to the staff, letting them know that what you're thinking doesn't have to be specific or certain, just that you are looking to put a long-term transition plan in place for the continuity of the practice. The delegation part, which is sort of that letting go, starting whether it's who's ordering the office supplies to who's working on the smaller clients, like making sure not all roads lead back to your one office and that you have trusted some of your folks to do some of the work. And if you don't have those folks, accelerate the transition plan so you can get those folks to go do the work so it doesn't have to be on one shoulders. When you get the transition in place, that letting go, embracing the change of technology and whatever it is the other firm has in mind, so long as it's within reason, trust the process. Um, and I would say the last one would be to sort of appreciate the relevancy. I mean, there's plenty of things to do out there. You could stay, hopefully stay in the job for a little bit, wind down the hours a little bit, or hopefully a lot. But the relevancy part, um, as you're going through sort of that step one of the transition plan, that person who's going through it should be thinking through to that checkpoint list five of what do I want to do tax seasons from now when I don't have to work 80 hours a week? Do I want to work in the business for 20, 30, 40, or not in the business at all? Do I want to play golf? Do I want to play, with the grandkids? Have that idea in mind and actually do it is key as well. So just kind of see this through from thought to completion.
Wonderful. Is there any question I should have asked that I didn't, Rishi?
Nothing offhand. You covered it. This was great. It was a great conversation.
Thank you very much, Rishi. It's awesome. There's just wonderful things at Venning Advisors that you're on a tremendous path, tremendous trajectory. And certainly having known you more deeply over the past couple of months, there's definitely a strategy which is not just the financial piece of this whole equation and building a very nice platform and sticking to, what you do best, in a certain niche, but also there's a tremendous people part to how you are acquiring these businesses, acquiring the people. So kudos to you and the team, Rishi. Really well done. It's a big part of it.
Appreciate it. Yeah.
Well
Thank you so
done.
much. I appreciate the
Thank
time.
you very much, Rishi. Take care. Bye
All
bye.
right.